Welcome to the Deep Dive, your shortcut to being well-informed. Today, we're taking a deep dive into the recent Q1 FY26 results for UTI Asset Management Company Limited. They're one of India's big players in asset management.
That's right.
And our mission, really, is to unpack the key stuff from their latest reports, investor presentations, give you a solid understanding of their financial highlights, strategy, operations. All concise but comprehensive.
Yep. Okay, let's unpack this.
We've got quite a bit to work with, haven't we?
We do. We've got the official filings, the detailed financials, the investor decks. It's a good set of sources. And the idea isn't just, reading out numbers.
No.
We want to distill what really matters, maybe find a few surprising bits, and help you connect the dots, see the bigger picture.
Absolutely. So let's kick things off. Headline figures for the quarter ending June 30th, 2025. Consolidated performance first. Total revenue from operations landed at 547 crore. That's up 3% year on year, but a pretty chunky 45% quarter on quarter.
Yeah, that QQ jump is noticeable. And the total income mirrors that 549 crore, similar rises, 3% YoY and 46% QOQ.
Okay, now the consolidated profit after tax, or PAT, came in at 237 crore. Now this is interesting. It's actually down 7% compared to last year.
Right.
But it's up a massive 172% compared to the previous quarter. So what's the story there? Why the dip year on year, but that huge surge quarter on quarter?
Yeah, that's a great question. It really highlights why you need to look, under the hood a bit. That year-over-year dip in PAT for the owners, it was mainly down to currency effects.
Oh, okay.
Specifically within UTI International, the U.S. dollar weakened against the Singapore dollar and the British pound during that quarter. So when they translated those international earnings back into rupees, it took a hit compared to the previous year.
Right, even if the underlying business was okay.
Exactly. But that big quarter-on-quarter jump, that 172%, that points towards some strong recent momentum in their operations, separate from those currency headwinds.
Got it. Currency impacts can definitely muddy the waters. So to get a clearer picture of the actual business health, we need to look at their core performance, right? Strip out those kinds of one-offs.
Precisely. Core performance is, well, it's crucial. It shows you the earnings from their main job managing assets without things like, one-time gains or those currency fluctuations we just talked about. Gives you a much cleaner view of sustainable profit.
So what did the core numbers show?
Okay, so their consolidated core income, this is from selling their services, basically, it was 379 crore. That's up a healthy 12% year on year and 5% quarter on quarter.
That sounds more like steady growth.
It is, and the consolidated core PP, profit after tax, stood at 122 crore. That's up 4% year on year, and importantly, up 24% quarter on quarter. So solid core profit growth too.
Okay, and if we drill down just to the India operations, the standalone figures.
Similar positive story there. Standalone total revenue from operations hit 437 crore. That's up 13% YoY and 38% QQ.
38% QOQ, wow.
Yeah, strong quarter. Standalone total income was 438 crore, pretty much the same growth pattern. And the standalone PAT, profit after tax, up to 216 crore. That's a 16% rise year on year and a very solid 74% quarter on quarter.
And the standalone core numbers.
Standalone core income from services.
Yeah.
309 crore, up 13% YoY, 4% QOQ. And standalone core P2. 118 crore, up 19% year on year and 9% quarter on quarter.
So summing that up, the core business, both looking at the whole group and just India, seems to be chugging along nicely, good growth trajectory.
Absolutely. What's fascinating here really is seeing that distinction. The reported PT tells one story, affected by external things like currency. But the core PT shows the underlying operational strength. It tells us their fundamental business is generating consistent, sustainable results.
Right. Good foundation. Okay, let's shift gears. Assets under management, AUM. The lifeblood of any AMC.
Engine, yeah.
So UTI AMC's total group AUM reached a pretty staggering 21,093,215 crore. That's as of June 30th.
Huge number.
And it's up 13.28% year on year. Also up about 4% quarter on quarter.
Solid growth. And if you look specifically at their mutual fund quarterly average AUM, the QAAUM, which kind of smooth things out.
Gives a better average picture for the quarter.
Exactly. That stood at 3,060,867 crore. And that saw even stronger growth, 16.15% year on year and over 6% quarter on quarter.
So the mutual fund side is growing quite nicely. What about the mix within that AUM? What kind of assets are they managing?
Okay, this is a key point. Equity assets, so that's both active funds and passive ones like ETFs, they contributed 69% of UTIMF's total average AUM.
69%. That sounds high.
It is. relatively speaking. If you look at the ratio of equity QAUM to non-equity QAUM for UTI, it's 69.31. The industry average is more like 60.40. So yes, they have a significantly higher concentration in equity.
What does that mean for them? Does that make them riskier? Or is it more about capturing potential growth?
Well, it's a bit of both, isn't it? Higher equity exposure does mean you're more sensitive to stock market swings up and down. But
But equities generally offer higher long-term growth.
exactly, especially in a market like India with its growth story and, rising retail participation. So it's likely a strategic position. It means they stand to benefit more when the market does well, capturing that upside.
Makes sense. And speaking of retail investors, SIP's systematic investment plans are a huge deal in India. How's UTI doing there?
Very well. Gross SIP inflows for the quarter were 2,260.98 crore. Their total SIP AUM at the end of June was 42,195.93 crore. That's up almost 17% compared to last year.
Solid growth again.
But here's where it gets really interesting. They talk about their long 10-year SIP book. Get this, 96% of their SIPs have been active for more than 5 years.
96%.
And it gets better. 92% have been active for more than 10 years.
That's incredible stickiness. These aren't flighty investors.
Not at all. And if we connect this to the bigger picture, that's a massive advantage. This incredibly sticky SIP book means very stable, predictable inflows and AUM compared to competitors who might rely more on lump sums, which can, disappear quickly in a downturn.
Right. It gives them stability.
Huge stability, predictable revenue, easier liquidity management, much better ability to weather market storms. It's a sign of real long-term investor trust and discipline.
Okay, so strong core business, growing AUM, very sticky SIPs. Let's look at where their revenue actually comes from. It's not just mutual funds, right?
They've diversified. Looking at their consolidated sale of services, mutual fund fees are the biggest chunk, naturally. 303 crore, up 15% YOY.
Okay.
Then you have PMS fees, portfolio management services at 6 crore. That was actually down a bit year on year. UTI International contributed 33 crore, also slightly down YOY, probably linked to those currency effects again, but up QOQ.
Right.
Then there's UTI Pension Fund Ltd, or UTI PFL. That brought in at 37 crore, up a nice 16% YOY.
Okay. Pension fund is growing well.
And UTI Alternatives, their private capital arm, generated 5 crore. That's up 25% year on year and quarter on quarter. Small base, but strong growth percentage.
That alternatives business sounds interesting. Tell us more about that and the pension fund.
Yeah, they're important subsidiaries. UTI Pension Fund Ltd, it's 100% owned by UTI AMC. And they're a major player in the national pension system, NPS. They manage almost 25% of the entire NPS industry's AUM.
A quarter of the market. That's significant.
It really is. And their AUM grew over 20% year on year to reach 3,081,383 crore. Big numbers.
And the alternative side?
Also 100% subsidiary. UTI Alternatives Private Limited. They focus on private capital, things like structured debt, real estate credit, distressed assets. They've got various funds like their SDOF series, Structured Debt Opportunities Fund.
Right.
Gross commitments there over 1,800 crore. They actually exited their first fund, SDOFI, successfully last fiscal year, and they just got the license for SDOFIV. So they're actively raising and deploying capital in that space. It's clearly a growth focus.
It certainly sounds like it. And didn't the board just approve a loan for them?
They did. That reinforces the point. The board approved a loan of up to 45 crore specifically to UTI Alternatives.
Okay, what's that for?
Working capital requirements, basically funding their day-to-day operations and growth.
So what does this loan tell us strategically?
It's a clear signal. It's an investment in a key growth area. Shows confidence in the alternative investment space. It's an unsecured loan, dispersed in tranches, interest linked to SBI's MCLR, repayable by 2028.
And it's structured properly.
Yes, they noted it's on an arm's length basis, even though it's a subsidiary. So proper governance. It just underlines their commitment to diversifying beyond traditional mutual funds.
Okay, diversification seems key. Let's talk about how they actually reach their customers, their operational strength. They seem to have a wide reach across India.
They really do. Their geographical presence is impressive. They cover 699 districts, which they say is among the highest in the industry.
And they have physical centers too.
Yep, 255 UTI financial centers, or UFCs. And here's a key detail. 205 of those UFCs are in what the industry calls B30 cities.
B30, meaning beyond the top 30 cities.
Exactly. Smaller cities and towns.
Why is that so important? Why the focus there?
Well, a couple of reasons. First, UTI is actually growing faster than the industry average in these B30 locations. Second, AUM from these areas tends to be stickier.
Stickier, like this SIPs, people hold on longer.
Generally, yes. Less prone to chasing short-term trends, perhaps. And crucially, the margins, the profitability, can often be comparatively higher in B30 cities than in the hyper-competitive big metros.
Ah, okay, so it's about sustainable growth and better margins.
Precisely. This deep penetration is a long-term strategic advantage. Plus, they have a huge network of distributors, around 75,000 MFDs, mutual fund distributors, supporting this reach.
Makes sense. Physical reach is one thing, but what about digital? That's crucial now.
Absolutely. And they seem to be doing well there, too. Digital purchase transactions jumped almost 30% compared to last year, reaching nearly 5 million.
Wow.
Digital SIP transactions also grew 25%. And get this, over 42% of their total gross sales in equity and hybrid funds came through digital platforms.
That's a huge chunk moving online.
It is. And it's not just transactions. They've got the mobile app, improved website, a chatbot called
Huh?
WhatsApp investing, real-time mandate registration, digital KYC using Aadhaar. Lots of tools to make it easier for investors.
And does it work? Are investors happy?
The service metric suggests it does. They process almost 98% of non-financial transactions the same day. Average call answer speed is just 6 seconds, and their complaints ratio is incredibly low.
So connecting the dots, this digital adoption,
Yeah.
it boosts efficiency, obviously, widens their reach.
Right, and it opens up opportunities for things like cross-selling other products, maybe upselling, and just keeping investors engaged. It's about future-proofing the business.
Okay, great operational insights. Let's move to something maybe less discussed but really important. Governance and sustainability, ESG.
Crucial aspects, definitely.
So on governance, UTI AMC highlights that they're professionally managed, no single promoter family controlling things.
All right, that's a key feature. And their shareholding is quite diverse. You've got big state-owned institutions like State Bank of India, Bank of Baroda, LIC, each holding just under 10%. Punjab National Bank holds about 15%.
And a major foreign investor, too.
Yes, T. Rowe Price International is actually the largest single shareholder. So a mix of domestic institutions and a global asset manager. Their board also looks strong. Half the members are independent directors, and they have women directors on the main board and the pension fund board.
Seems like solid governance structure. What about their ESG commitment? Is it just talk, or are they backing it up?
They seem to be backing it up. They emphasize ESG is integrated across a business. And the ratings reflect that. Their Sustainalytics ESG risk rating has improved significantly, moving from high risk down to medium risk.
That's a positive trend.
And another agency, SES ESG, gave them an low risk rating. Plus, they're signatories to major global initiatives like the UN Principles for Responsible Investing, UNPRI, and Climate Action 100+4.
Can you give us some concrete examples of what they're actually doing on the E, S, and G fronts?
Sure. Environmentally, they mentioned being paperless, using 100% renewable energy at their main office tower, composting wet waste, recycling paper and plastic. Standard stuff, but important.
Okay.
Socially, they report female workforce representation at over 26%, mandatory diversity and inclusion training, employee volunteering programs, and ongoing CSR work in healthcare, education, etc.
And governance, beyond the board structure.
Robust risk management framework, constantly strengthening cybersecurity. They mention specific tools like CART, ASM, BAS, cloud security. It looks like a comprehensive approach.
So for our listeners, why should they care about this? Why are strong ESG and governance not just nice-to-haves for an asset manager, but actually critical?
Well, they're fundamental for long-term value and stability. Strong governance builds trust. Simple as that. Trust with investors, regulators, everyone. It signals stability, ethical operation.
Which you definitely want from someone managing your money.
Absolutely. And ESG performance. It's increasingly seen as a proxy for resilience. It shows the company is thinking about long-term risks, environmental risks, social risks. It helps attract capital, especially from investors who care about sustainability. And honestly, it often correlates with better management quality and financial resilience overall. It's about building a business that lasts.
Right, future-proofing, as you said earlier. Okay, let's bring in the view from the top. The MD and CEO, Mr. Imtaizur Rahman, had a quote in their release.
Oh, yes, let's hear it.
He said, Q1 FY26 has offered a strong start, both for UTI AMC as well as the mutual fund industry. At the company level, we have seen a notable growth in AUM and steady SIP inflows. The MF industry has witnessed continued rise in the assets under management and SIP contributions, which is quite encouraging, and this reflects the resilience of investors. Despite global triggers and other geopolitical tensions, the impact on the Indian economy has been well contained. This bodes well for the investors and the mutual fund industry.
Sounds pretty positive, confident tone.
Yeah,
Yeah.
quite optimistic about the momentum carrying forward.
And that statement really ties into their broader vision, doesn't it? They want to be leaders, not just in mutual funds, but also in pensions and alternative investments. They talk about building a top-notch investment team, strengthening distribution, embedding ESG, having excellent systems, growing internationally. It all fits together.
And they seem to boil down their future strategy to three main pillars, right?
That's right. Simple and clear. Grow the core, leveraging that digital ecosystem we talked about, new growth avenues like pensions and alternatives, and optimize costs, basically, running efficiently.
Okay, so wrapping up this deep dive then. UTI AMC's Q1 results paint a picture of a company with pretty solid AUM growth, especially in mutual funds and pensions.
Definitely.
A clear strategy focusing on digital, reaching into those B30 cities,
Yeah.
diversifying revenue through subsidiaries like the pension and alternatives arms.
And a strong emphasis on governance and ESG integration.
Right, so it feels like it's not just about the quarterly numbers, but really about the underlying plan for, well, growth and resilience in what's a pretty dynamic Indian market.
Absolutely. And maybe a final thought for you, the listener, to chew on. Considering UTI's specific strategy, that heavy lean towards equity AUM, the big push into digital, the B30 focus, how might future changes, say shifts in investor preferences away from equity or maybe even faster technological disruption, how might that impact their leadership position down the line?
Good question.
And what could that mean for the whole asset management industry in India? Something to think about.
Definitely food for thought. Great questions. Well, thank you for joining us for this deep dive into UTI AMC's Q1 FY26 results. We hope you feel much more informed.